Alrighty, folks, we had some big earnings last week, specifically Netflix and Tesla. We have a monster week ahead of us. Apple, Alphabet / Google, Meta / Facebook, and many,
Amazon.
many more, and Amazon, many, many more. And we have the one and only Mr. Dan Bird, who's going to go into the charts and tell us what the charts are telling us. How you doing, sir?
I'm doing good. How are you?
Oh, I'm doing wonderful, man. Just about to kick off a 3-hour meeting where we're going to change some lives.
Right.
So thank you for
Right. I
doing this.
know. I know. That's why we have to uh, get through these quickly today to
Yeah,
allow you to prepare for that big meeting.
there, there you go. Well, do me a
Maybe
favor.
I'll do
Let's
one
get
with
into
you
this.
one day.
Yeah. Yeah, folks, do me a favor. If you would love Dan Bird to do one of these sessions where we open up to only 100 folks on Zoom, let us know in the comments below. We would do something on stock trading, or at least chart reading, risk management, his risk scores, all of those things. Let me know if you want to be a part of that so you can ask him questions directly. Leave comments below, and maybe we'll get something scheduled in May. Thank you for that. It's a good idea, actually.
Sure. No problem. All right. So we just went through where the market is. And as you mentioned, you're out.
I am.
And I'm out. I'm out naturally. I raised my stops as the market was kind of moving. Yeah, actually hit a peak, and I thought it was ready for it to kind of roll over. So my stops just took me out naturally.
Yeah, and I sold on a moment's notice. I'm like, I don't feel good. I'm selling. So my
Right.
stops were not impacted. I just an emotional trader, I guess. So that's
Yeah.
why I'm not good. That's why I'm not a very good stock trader.
Yeah, but you made money.
I did, but that's why I don't do it a lot. That's why I don't do it a lot.
Well, you just pick your spots. That's all. There's lots of different ways to trade the market, invest in the market. That's what makes the market.
Yep.
It's buyers and
Yeah.
sellers. That's what makes
Yeah.
it. So
I was 3 for 3, so hey, that's you can't get better than that. So
and you had a few little ones in between, right? That you
yeah,
made
I
money
did.
on.
Yeah,
Yeah,
earlier, yeah. So
right.
yeah,
Real, those are real trades. These are like quasi investments. I would
just,
call I wouldn't call these investments for you. I would call these um, trend trading, position trading.
yeah.
You
What
bought
I
you
did
bought
is I
low and you
came.
sold high. You bought low
Yeah,
and sold high.
I
You
bought
can
after negative news. I did my research, thought there was an overreaction. I
right,
bought 3 stocks. So one of them I bought once because it went up right away. So that was JP Morgan. Because
right,
I was going to do what you taught me, right? I was going to do up to 4 tranches. So JP Morgan, I only got 1 bite. Meta, I got 2 bites. Blackstone, I got 3, but made money on all of them. So
right. Yeah,
there you
you
go.
did it. You did it the right way. You bought low and sold high.
There you go.
You could,
Yay!
you could write a book.
No, no, no. Hey, let's get into the stocks. I want to talk about Netflix and Tesla, and then more importantly, what do we see in the big earnings next week?
Sure. Let me share and let's look at Tesla. Oh, here's my newsletter if anyone's interested that wasn't on the last session. But I do this for free, and I don't sell your emails or anything. So if you're interested in joining, just send me a note to breakpointtrading@gmail.com, and I will add you to the list.
There you go.
So let's go look at Tesla or Netflix. Let's look at Netflix first because they're the ones that reported first last week.
Okay.
So Netflix was interesting. They missed earnings.
Right.
So let me explain my chart a little bit here.
Okay.
And maybe if we do that session with your 100 subscribers, we'll kind of walk through how to set up a chart.
Yeah, it could be fun.
What some of these indicators mean and how to set up a simple one to start with, because you don't want to have too much on it initially. But the way mine set up is I look at moving averages. So I have an 8-day, which is the pink line, a 21-day, which is the blue line, a 50-day, which is the red line. Those are the 3 key ones. The 200-day is the dashed gray line at the bottom. That's what the major traders usually like to buy, things that are above the 200-day because that's long term. And then I put an 89-day, the purple one here, just for fun, basically.
Okay.
Now, why do I use 8, 21, 89? Those are Fibonacci numbers. So on a lot of charting programs, they'll default to 10, 20. 50 is the one that all the big investment houses use. So they all look at the 50. The Fibonacci that's closest to that is 55. But since 50 is what everybody typically watches, I use the 50. And then 89 is also a Fibonacci number.
Got it.
You can look up Fibonacci and learn what that means. And that's why I use those.
Okay.
The one on the top is a PPO, which is a price performance oscillator. It essentially takes the distance between these moving averages. And you can see when these moving averages are pretty far apart from each other, that means the price is high. So it's moved away from the slowest moving average. And that's what the PPO or the MACD looks the same as this. That's what it does. Moving average, convergence, divergence. It calculates the distance between the moving averages and it plots that out. So it shows you how far away those that price is from the moving average. And usually when that crosses down like right here, that's usually a top. And when it crosses up from the bottom, that's usually a bottom. Okay. And then the RSI is relative strength. It's basically the strength of the move based on its historical previous moves. So it's not, and that's an important distinction because when we get into looking at the charts for next week, I'm going to look at those in a little different way. I'm going to look at relative strength versus the peers in their own industry. So how is that company doing versus all of the other companies in its own industry? That's a different way of looking at relative strength. This relative strength is relative to itself. How is the price moving right now based on where it's moved in the past? And you can see when the price goes up, then this RSI relative strength goes to the top. And when price goes down, it goes to the bottom. So it's just an oscillator that goes back and forth. And then accumulation distribution is one that I always like. It shows you, is it being accumulated? So even if the price is going down like this for Netflix over the last month or 3 weeks, the price has been declining, but the accumulation has actually been rising.
Wow.
The big traders, even though the price has been declining slightly, the big traders, it kind of went sideways. So they weren't distributing, they weren't selling, they weren't necessarily buying, they were waiting for earnings. But as soon as they missed earnings right here, it went down. And the green and the red here, this is something that most people won't use, but I put it on because I think this is interesting. These are essentially stop levels. So there's a way to calculate where you can put a stop. So the green one is a stop if I'm long. So if I'm long this particular stock and it comes down and goes below this green line, which it did right here,
right,
that's where my stop should be.
Got it.
Right there. The red one is if you're short. So it's the opposite. If it's down here and it goes up and it goes above the red line, then you want to stop there to get out because it's starting to head higher. So I put that on there just for interesting visual. And interestingly, with Netflix, it actually came down right to the stop level, didn't go below it, and then bounced back up the same day. So this little candle here is the day of earnings.
Yep.
So it went down, and then buyers came in and started buying again. And the next 2 days, buyers continued to buy. So Netflix, even though it missed earnings, actually looks pretty strong right here. And look at accumulation distribution. Right. After earnings, after they missed earnings, Wall Street started buying, started accumulating this again. And it actually now is hitting 52-week highs. It's above where it was before.
Interesting.
So even though Netflix had bad earnings, it actually looks pretty good. It's still below its moving averages, but it could very easily get back above those. Okay. So Netflix is an interesting one to watch. We'll put in Tesla because Tesla has also missed earnings, but has an opposite look.
Oh yeah, look at that.
In fact, what I'll do here is I'll put in Netflix again. So this is Netflix and this is Tesla. So we'll look at these side by side. So there's Tesla. There's Netflix.
Yeah.
Tesla, Netflix. Both of them went down after earnings. But in the case of Tesla went down, was already below all of its moving averages. It's been below the 200-day. Has not been able to get above the 200-day moving average. Had bad earnings again, and it dropped down below all of its moving averages. Yeah. Now, with Tesla, one thing that I notice on the chart, and we'll see if this makes a difference or not, but if I were to draw a little box in, you see this gap down here? So prices a lot of times like to fill the gap.
Oh, okay.
So you see this gap back here in January?
Yep.
When Tesla gapped up, it may actually want to come down and fill that gap. So that's what I would be looking at. That's the thing that would concern me about Tesla. Unlike Netflix, Netflix might actually be a good one to get back into right now because it stayed above its stop level, and it looks like it's trying to make a push back above the moving averages. Tesla, on the other hand, I would be concerned about this one because it may actually want to fill this gap down here. So I would want to wait and see what Tesla does before jumping back into it. And if it does fill this gap, then that might be a really good buy point.
Okay.
Down in there. Okay.
Mm-hmm.
So now let's look at what's coming up next week.
Yeah, I think we got what, Microsoft, Coca-Cola's on Monday, and then we got Microsoft and Google on Tuesday, I think.
Yeah. So we're going to look at these a little bit differently. So this is my standard chart. This is actually my default chart.
Okay.
And at some point, I'll show folks how to set these up and set up defaults in stock charts. But I have one chart type called relative strength. And this is the relative strength versus its peers. So as opposed to relative strength, like I just explained, relative to itself, how is it performing based on its history? Right. This is relative strength based on the peers in its own industry. So the way this is structured, and the way that I like to look at candidates to buy anyway, is are they in a strong sector? That's the gold area. Are they in a strong industry group? That's the green area. So the gold is the sector versus the S&P. How is it performing versus the S&P? And you can see that it's moving up, so it's outperforming the S&P. How is this industry group performing versus its own sector? The sector in this case is technology. So this is sort of going up a little bit, kind of sideways. So it's performing okay. It's outperforming its sector pretty well. And the industry group in this case is software. And then the blue one is the most important. How is it doing versus the peers in its own group? Okay. So that's the one you want to look at. So in the case of Microsoft, it's outperforming because it's been moving up, but since about a month ago, it's sort of been going sideways. So software and Microsoft are kind of moving together. They're just going along for the ride. And I would actually say that the software sector or industry group basically follows Microsoft. Okay. So as Microsoft goes, so goes the software group. And it kind of shows you that there. And the red one is just for an added bonus. It's how is it doing against the whole universe of stocks? Not just the S&P 500, this 500, not just the NASDAQ 100, not just the Dow 30, but every single stock, everything that's out there. Okay. And you can see it's been outperforming, and then lately, just like in this industry group, it's kind of going sideways. It's kind of going along for the ride. Okay. Then the next thing to look at is the chart itself. So what does the chart look like? You can see the moving averages, and the 8-day is kind of rolling over. So, and then finally the accumulation distribution. It looks like it's being accumulated. So over the last month, remember there's a quiet period a couple of weeks before earnings, right, where the company can't really talk to analysts. But the month before that, analysts do talk to them, and analysts do get an idea of how the quarter is going and how they might report. Right. So if you look at it before then, is it being accumulated prior to that 2-week quiet period? Right. Okay. And it looks like it has been. One thing also to keep in mind for those folks that are traders, it's dangerous to hold on to a stock into earnings. It's a binary event. Right. Earnings, and it's not so much what the earnings are, it's how the market reacts to what the earnings are. Correct. So it could have great earnings and the market sells off. Or it could have bad earnings and the market pushes it higher, right?
Mhm.
So sometimes the better way to do it is to start looking at these about 3 or 4 weeks before earnings. And you'll notice in a lot of these, a lot of them will start moving up before the earnings, up into about a week before earnings. You can see that with Microsoft. So the play for some of these that might come in stronger, that are leading their industry. And by the way, I think the whole market is being driven right now by about 10 stocks.
Yeah, there's no question when you look at the data. Yeah, it
Right.
might even be 6 or 7 stocks, but yeah,
Right. There's
10
just a
stocks.
handful of stocks that are moving the market. So
Yeah,
if you want to,
if you take those 10 stocks out, the market's down significantly.
that's right. Exactly. So this one's a good example with Microsoft. The time to start buying this one was about 3 weeks before earnings, back here in the middle of March. And you can see the run up into earnings, and then it just goes sideways waiting for earnings. And then it will depend. If earnings are great, it'll continue higher. But if it meets expectations, but just meets it, then that could send it down.
Okay.
You just don't know. So it's kind of dangerous to stick with it through earnings. So let's look at Meta.
Okay.
Now we'll do this pretty quickly on the rest of these. So gold and green are sector and industry. Blue is the important one. How is it doing versus its peers? And Meta is significantly outperforming its peers. And it's in both a strong sector and a strong industry. And it's outperforming the rest of the market. Again, look at what's happened since the middle of March. You know, the time to buy. If you're looking at these big names and you want to get into them, or you want to do options, play with options, some of these big names, because people maybe can't afford $100 or $212 stock, right? But options are much cheaper. So the way to do it is wait for it to look about a month before earnings, wait for it to come back to the 21-day moving average, which is reversion to the mean. Hit it right here, about a month before, and buy an option 60 days out, and then just ride that option into earnings and then get out of it before earnings.
Right.
All right. So you see that trend?
Sure.
About 3 or 4 weeks before earnings. We'll take a look at that on what's Amazon. It's next week. Amazon. So this one is in the broadline retailers sector, and it's in the consumer discretionary industry group, consumer discretionary sector, I'm sorry. And it's in broadline retailers. So the sector is going sideways. The industry group is just starting to pick up. It is sort of like going along even with its peers. Mm-hmm. So it's hanging in there. It's doing fine, but it's not really outperforming. And same thing with the rest of the market. And then again, if you look at March right here, went down, hit a low, and started to come back up. So when it came back up to the 21-day right here, that would be the time to buy a 60-day out option and just ride it for 3 weeks into earnings and sell it before earnings. Right? So
not financial advice.
Not financial advice. I'm not recommending you do this. I'm just pointing out how to use charts in identifying buying and selling points. And with these big names that are moving the market, they are typically going to run up 3 or 4 weeks before the earnings, especially if they have good accumulation distribution. You see right down here.
Wow.
Because remember, the analysts are talking to these companies before earnings, but a couple of weeks before the earnings come out, they can't talk to them anymore. Right. There's a quiet period. So they gather all their data in this month or so period before earnings. And that's where you see the accumulation start to go up. And that's where you can get in 3 or 4 weeks ahead of time. Okay. So right now on all of these, it's probably too late to take a position because they're all coming out next week with earnings.
Right.
So what I would do is just wait and see what the earnings are and then make a decision. You look at Coca-Cola. So this is not in the technology sector. Soft drinks sector is sort of going sideways. Industry group is not too impressive. It is outperforming its peers. So Coca-Cola is doing pretty well against its peers and against the whole market. It's doing okay, a little bit better, but its sector and its industry are
What
nothing.
about Google? I think is the other one that big
Yeah,
tech
we'll look at
next week.
Google,
So
but again, look at this
yeah.
since the middle of March.
Yep.
Look at what Coca-Cola has done. So they report next week. So watch the 21-day moving average. About a month or so before earnings, came down and hit the 21-day right here, went up through the 21-day right here, buy a 60-day option right there, and then sell it 3 weeks later. Google. Great sector, great industry. It's underperforming its peers. Interesting. Would you have expected that?
Yeah, actually. Yeah. Google's in trouble. They
Right.
yeah. But Samsung's talking about giving Microsoft $1 billion or something.
Yeah, for
Google
Bing.
just shut down their 80-acre complex in San Jose.
Right.
Yeah, Google's in some muck right now.
Yep. So that's one that I probably would not hold. Well, I wouldn't hold any of them into earnings, but this is not one I would be buying before earnings.
Yeah.
Because it's underperforming its peers. It's barely outperforming the rest of the industry, and its chart looks, it's very difficult on this chart. Now, if we take the same strategy and say a month before earnings, knowing that Google is one of the big ones that moves the market,
For sure.
again in March when it came up to the 21-day and went through it, buy a 60-day option right there and then sell it right here. Accumulation distribution actually looks fairly good.
Yeah.
Being accumulated. So
I like it.
what else?
Look at JP Morgan.
Okay, JP Morgan's already reported.
They did 2 weeks ago.
Last week.
Yep.
So as you would expect, terrible sector and terrible industry.
Yeah. Yeah.
Right.
Guess when Silicon Valley Bank was. Just one
That's
guess.
right. You can see where it was right here where this
Exactly.
fell off a cliff right there, the cliffs of Dover. But look at JP Morgan versus its peers. While its peers aren't really doing too well in that industry, JP Morgan is significantly outperforming them. Yep. I mean, ideally, you would want all of these to be heading from lower left to upper right, ideally.
Yep. Yep.
But all things being equal, you want this blue one to be significantly outperforming. So you want the best house in a bad neighborhood.
Okay.
Right?
Yep. Yep.
And then again, here's when JP Morgan reported right here.
Yep.
Had a big jump up. Zuber sold at the high.
Yay.
In fact, you sold right at resistance.
I did.
Look at that, right?
I looked at the chart for like 15 seconds.
Good. So you saw resistance right there?
I don't know if I call it resistance. I saw it was back to the past peaks. I'm like, I'm done.
Right. Well, think about what charts tell you. It's basically mass psychology. So up here, it had a big run up. A whole bunch of people bought it right in here. Mm-hmm. And then it went down. These people were like, crap. Went down, came back up. They're like, oh, good. It's coming back. It's going to break through. And more people bought it right there. Yeah. And then it went back down. They're like, then more people bought it here. Like this time it's going 1, 2, 3, 4 times it's hit here. This time it's definitely going. So more people bought it here, and then it went all the way down here. Yeah. And all of these people over here are like, damn it, that was a bad choice. So all they're waiting for is for it to get back to even, so they can get out. Yep. That's what resistance means. Resistance basically is all the people that think they made a mistake buying it just want to get out, breaking even.
Yeah, I bought it right around October 12th or 13th, like at 102, and sold it at 140.
Back here. Yeah.
Yeah, something.
Yeah, so you bought it at the low and sold at the high.
There you go. Got lucky. Excellent. How about one last one? We'll do Blackstone, BX. That was the other one I got out. That's the one I bought 3 different times, 3 different tranches.
So again, terrible sector. Industry group actually is not too bad. It's sort of outperforming its group. It's sort of going sideways. So I would call it just going along for the ride. It's not significantly outperforming its own peers.
Right. Mm-hmm.
And then the chart, the chart is trending down actually.
Yeah.
So it made it above its 200-day. You probably bought it back a couple of times back and through here.
Yeah, I started buying it like early December, bought it all the way until
Right.
I think my last was late, like right around Christmas.
Okay.
So
Yeah. So you're at
three
the
different
bottom. You were
buys.
at the bottom down here. So this is one that came up and then came all the way down and then starting going back up. Friday had a big sell off.
Yeah. So I sold Thursday morning. So right at the peak of the day or near the peak.
There you go. Yeah.
Yeah. 93.75 or something.
Buy low, sell high.
There you go.
You got it. You know how this works. And look at the
Nice.
accumulation distribution is, has been going sideways and now it's just kind of crashing.
Yeah.
Now this one might continue to head lower.
Yep. Very cool. Well, I appreciate
So
you
we'll
doing
see.
this.
We'll see what happens next week.
Well, one thing you did for us last quarter, I believe, of the big four, Microsoft, Google, Amazon, Facebook, Meta.
Right.
One time you said what was the best, what was the worst. Do you have an idea for those four? Let's play that game again.
I did that on the banks.
Okay.
Yeah, I said Citi and JP Morgan would be the best.
Right.
And Bank of America would be the worst.
So you want to take a look at
there's Bank of America.
Yeah.
It had a little bit of a run, but not too impressive. And JP Morgan we looked at already. And Citi I thought looked like the best. And Citi had a nice bump and then started coming back Thursday and Friday.
So what do you think? Meta
this week,
Google,
I think
Microsoft.
Probably Meta, Amazon, Meta, Google,
Microsoft.
and Microsoft, right? I think Google will be the worst. I think Meta actually has a chance to outperform.
Okay.
I think Microsoft will be second, and then
Amazon third.
Amazon, yeah, I think that would be the order. I'd say Meta, Microsoft, Amazon, Google.
All right, I like it. We'll see what happens next week.
And by the way, one that doesn't get talked about a lot, but Oracle. Oracle is kind of a sleeper.
Yeah,
stock.
look at that chart. Wow.
Yeah, this one's just going up from October at what is that, $50, $60? It's going to try to break 100 now.
Okay. Wow.
So Oracle's interesting. So we'll see what happens.
Very cool, man. Where I appreciate y'all do. Remember, folks, if you want him to do one of these Sunday sessions where we go for 2 or 3 hours, leave comments below. It will be a Zoom meeting, not a webinar. So that means you can ask questions. Let us know if you're interested. Leave comments below. And of course, his newsletter is breakpointtrading@gmail.com. Get it. I get it each week. Look at it. Cartoons will certainly make you laugh. If you don't want it anymore, send him a note. He'll take you off the list. Dan, I appreciate you. Thank you for getting on so early.
You bet. Have a good weekend and good luck with your session.
Thank you, buddy.
Take care.